Hello everyone. We're going to talk a little bit about what we can expect out of the US economy into the next couple of quarters, particularly the end of the year. I think that the first thing that we can say is that growth is actually stronger than what many predicted, and that's a positive. It is good to see that consensus has to revise up their estimates and that the underlying improvement of the labor market, of the housing market, of industrial production, of capital expenditure and of exports is positive despite all the political noise that you want to add. I think that at the end of the day, markets are reflecting that finally we are seeing earnings growth and that finally we are seeing margin expansion in a great deal of sectors. So let's look at those positives, because paying too much attention to headlines in the political arena does not help when you invest. So underlying economy doing well. We can continue to expect a little bit of an upgrade to consensus estimates into the end of the year. And let's talk about the tax reform, because that is a clear, the biggest impact on earnings and on the valuation of the market. How much of the tax reform is already embedded in valuations? To be fairly honest, very little. If you look at consensus estimates and if you look at the projections of EPS, very few consensus analyst estimates are embedding any level of impact from the tax reform. However, we've seen a little bit of margin expansion, but the margin expansion has come fundamentally from technology stocks, which have continued to do very well. We see that actually in the sectors that are most benefited by the tax reform, particularly industrial sectors, margins will be improving, obviously, and earnings will be improving. However, market multiples have not increased. Actually, they have reduced a little bit. So that's a positive and gives an opportunity. In terms of other elements to watch, the debt ceiling and the budget. Those two elements are relevant for sectors like healthcare and sectors like defense, but they're also relevant to take away a little bit of the noise out of the market. I think that if the tax reform is passed and we start to see a little bit of support in Congress, the political catalysts will not continue to be a burden on people's perception of the economy, but at the same time it will continue to strengthen the opportunities to look for stocks and bonds that reflect that underlying improvement in an economy that is actually doing much better than what some would like it to do. Thank you so much.